A Māori-focused VC is a natural next step for collective Māori investment, writes Guy Te Kiniwe Royal in this week's Te Ohanga Māori column at NBR. Kia ora, Guy. Before we explore collaboration in the Māori investment sector, let's start with the bleeding obvious, as you put it in your column, how small the New Zealand economy is. What about the size of the Māori economy?
Yeah. I mean, the whole point of this column has been something I've been working on for quite a while. And I'm starting with the bleeding obvious, a truism that New Zealand economy is very small. I do make a reference to Elon Musk. I think we're about 355 billion, something like that. We're roughly, I think he's 400 billion. I have to say, post Twitter, you do wonder how much he's worth now.
It's fluctuating a bit at the moment, yeah.
Yeah. But nonetheless, it doesn't really matter. The point is, we're minnows on the global scale. We're small, and there's a general fact around how capital markets work is when you're small, it's trickier to grow your wealth. And in New Zealand, so the New Zealand economy is pretty small, and then the Māori component of that is roughly about 20%, about 70 billion, probably about 80 billion. I'd argue there's probably a bit more than that. Of course, that's not a cash-driven number. That's just purely your assets and where you're sitting inside the economy. So we're talking about small inside small. And so hence, leads you to a kind of natural position around, you got a number of Māori organisations who are small inside a small economy. How do we grow their asset base? How do we grow some wealth and the individual GDP of everyone inside them in a kind of manner that's going to be that we can see some really transformative things happen, and it's really tricky.
Why is it so tricky? Have they sort of been quite siloed for historically, or?
Yeah. Also, if you think about it, the treaty settlement process itself was really arguably only about 20 years old. I think, Naito and Tainui celebrated their 20th a few years back of their settlement. So it's a pretty recent experiment, right? To try and produce a return to groups through under the basis of truth and reconciliation model of the treaty. Of the tribunal, some sort of economic wealth back to them. Just remember, of course, that that's been determined that it's less than generally 1% of all the wealth that's lost. I do reference at the beginning of the article a statement by King Tawhiao, ki te kotahi te kakaho ka whati, ki te kapuie kore e whati. If there's one reed, it breaks easily, but gather many together, they don't break. It was written in a time, it was made in a time when, in fact, he was watching 20 years after signing of the treaty, an incredible, in front of their eyes, an incredible loss of land. The soldiers have come in, they've had the land wars. He was attempting to go to London and meet with the Queen to talk about why, what's happening in New Zealand and why he thought that she needed to intervene. And as you're watching in front of your eyes, you get losing 1 million acres of land, you begin to quickly realise we need to stick together. And so that was the Kingitanga movement, which is basically more about a collectivization. How do we stick together as a group in the face of this in-swarming, group of settlers coming in? And that kind of still resonates. So if you're small and you're watching on a global scale, you're starting to look smaller, you need to collectivize. When we did treaty settlements, we chose to, the New Zealand governments gave them certain parameters, what they had to look like, gave them a certain structure, which they had to look like. And as I presented about maybe 4 or 5 years ago, there's a worrying trend that there's a large number of them, not all of them. There's a group that tend to be fine. There's a larger groups in the, in the Ngapuhis and the Ngāti Porou and Tainui and others they're going to be in a reasonable scale. But the bulk of them inside your bell curve, they're less than 40 million or 50 million balance sheets. They're really heavily governance structured. They've got really little or no management. And they really struggle to figure out how can they produce that small amount of cash that's been placed with them to produce some outsized returns or transformative changes inside their regional economies. And by the way, they've been told their job is to help transform the regional economy. And they take that on as a serious obligation. But they've been given, effectively, they've been placed with tiny amounts of cash or capital to try and do that. So when you pull all that together, you go, there's a real big problem here. Circa 60 organisations in the treaty settlement space. When we finish, we'll be about that. A whole lot of land groups that are also siloed. A number of groups that even if they haven't settled, they maybe have some bit of fisheries assets, and they all tend to look roughly the same. Inability to really make at any scale some significant development and grow their own capital base.
You do in the column point to some sort of examples of collective approaches, both informal and formal. I mean, can you go into a bit of that, what we are seeing in terms of...
Yeah, it's not, yeah, exactly. I mean, it's not as if I'm pointing out something that no one's spotted before. And so in the primary sector, following on from Terra and the Zespris and all these others, there's been a number of collectivization models, and that the bigger large land incorporations, Wakatu, PKW in Taranaki, which is the largest corporate shareholder in the west coast of Fonterra, they're all examples that were done in the 60s and 70s and 80s around basically pulling together a whole lot of land blocks into larger corporations. And we've also seen in the fisheries sector, there's been a number of entities realising that when you've only got small amounts of quota, you need to kind of collectivise those and put those together in groups. The Māori Fisheries Commission, Moana, one of the largest fishing companies in New Zealand, they're all collectivised entities. And then there's been kind of more recent ones. We've seen Miro. Miro is a kind of collectivised horticulture business, primarily focused on blueberries at the moment, but it's going to expand. And that was invested into by a large number of Māori groups. And then we've seen the Tupuia Tapapa, which is the infrastructure fund, which was the ability to have a relationship with super funds, seeing the size of deals and the opportunities that super fund gets. Can we access some of those deals? And so through a collectivized vehicle, having a relationship with super fund, that fund is invested into kind of more at the PE level, larger scale infrastructure investments.
These are all sort of very tangible assets, quite big deals. What about at the sort of early stage, maybe more riskier end of town as well?
Yeah, well, that's what I argued is probably the next natural step. Yep. And so it's a tricky space. So early stage, I call it rarefied air. There's a reason why venture capital funds have tended to become in the last sort of 20, 30 years the default vehicle for investing into this. You never know at early stage if the business is going to make it or not. There's just too many unknowns. And we all know good product doesn't always win the case. Good people, but without a product or cash, doesn't win the case. There's been this, I think it was by Stanford, significant research done on why do certain companies become unicorns and grow well and why the others don't. Is it decent product strategy? Is it understanding the market? Is it execution by the management team? Ultimately, they boiled it down to there's just one thing. It's timing. So when you've got timing as one of your critical factors, that's an incredible unknown that no one really knows how markets work and when your timing's right and when it isn't. And so what is best is if you're a small group, it's a tricky proposition. But a lot of Māori groups are watching the kind of exits that occurred in the last few years, ones like Vend, Simplicity, and a number of others. And those returns, which are at pretty decent return scales, better than you're ever going to get out of any of the PE or returns off, listed equities, they don't seem to be participating in that. And so the way to do it is probably to do it through a VC fund. And there have been some have invested into Movac and Icehouse, Hill Ference, others have received, WNT have received some funding, but not really en masse. And so I think the natural proposition is the next step would be to build a Māori VC fund, which is kind of designed to mobilize that capital as a collective into that space. And if you're going to do that, you might as well maximize the opportunity about growing capacity, use it as a vehicle to grow early stage investment skill sets, start placing people inside portfolio companies, allowing, Liwi Māori groups to start bringing interns and placing them sitting on advisory groups of the investment committee, and then also a program developing founders. How do we grow more Māori business founders, particularly in the innovation IP-driven sector?
Is there much discussion about this sort of idea going on, or have you sort of...
Yes, there is.
Yep.
Watch the space.
Okay. All right, Guy, thanks very much for your time.
Kia ora.